I've got a question. How many people have done a stock transaction? Okay. Anyone else?
I almost did one.
You almost did one, or?
It doesn't count.
So I'm doing one. I'm in the middle of one right now, and I don't have a good form for it. The one that we have is just basically assets. So most business transactions are asset sales, right? You kind of pick and choose, and you spread out the values to the equipment and to the goodwill, and there's tax reasons, but there's also tax reasons for a stock sale. And my seller wants to do a stock sale. Okay, so I'm going to do a stock sale. I mean, he wants to do a stock sale. The CPA said he wanted to do a stock sale, and so we're doing a stock sale. Now I jerry rigged together a stock transaction PSA off of our asset. I had to really, I wasn't comfortable, let's put it that way, because it was not designed, and I'm not an attorney, right? None of us, well, Tanya is attorney, but we're not representing ourselves as attorneys. So I went in there and redlined and added and played around with it. And then I sent it to him and I said, you got to send this to legal. You got to make sure this is the way you want it. And out of that, maybe I'll get a good stock PSA that I can maybe down the road look at a little bit more. But just the highlights of it. I mentioned earlier how you can separate out the values if you do an asset and for tax purposes. But in a stock transaction, you get lock, stock, and barrel. I mean, you can, on the balance sheet in this particular case, if they buy the stock, they get a $400,000 note payable to the seller. Well, that's going to be forgiven, but you got to watch those things because that's part of the stock transaction. So you have to look at the balance sheet, whereas in asset sales, not so much, I don't think. But the advantage is it's very simple, and it really is simple. You just say, here, take it. And they get everything. They get the payables, they get the, they get everything. They get the receivables. You don't have to do, like in this case, it's manufacturing and work in progress. If any of you have done work in progress, that can be complicated. They just get it all, good and the bad and the ugly, right? And so anyway, that's what I'm doing.
So I would say two things. With the Broker Simplification Act, from a federal standpoint, it did give business brokers the ability to do stock purchase agreement or to use stock purchase agreements and to do stock sales without having a securities license. However, it does not supersede state law. So you need to check your state law to determine whether or not your state law permits you to do stock sales without a securities license. In California, we can transact the stocks, the sale, as long as it's 100% of the stock. We can't do 90% or 95%, even though Broker Simplification Act, from a federal standpoint, you can now. But in California, we cannot. Also, in California, you cannot advertise a stock sale. You have to advertise the business as if you're selling assets. So you can never say, if you don't have a securities license, you cannot say you're selling stock. Once you have the buyer, and if the buyer, you get a buyer on the phone and you can tell them that the seller wants a stock sale, but you cannot advertise it that way. So be very careful and understand your state laws. If you haven't already done so, I would definitely go check that and just make sure, you don't want to run afoul of any of that.
I did go to my escrow company and the one that does the closings, and and they kind of gave me the green light. I haven't gone to the state, and I hesitate to ever go to the state and ask a question.
You don't go to the state, you go to an attorney. And you ask an attorney, whether or not your state law, or you call, well, yeah, I mean, really, you just need, it's legal advice, so nobody else is going to give you legal advice except an attorney. But, you just need to understand whether or not your state laws allow you as a business broker, you have a real estate license, but you don't have a securities license. Under those conditions, are you allowed to participate in a stock sale of a business? Now
I
that,
knew there were some red flags that flew up, Tanya.
yeah.
And
And also, what are the remedies? Because I know that here in our state, if I sold 80% of a business, let's say somebody came to me and they said, hey, we want to sell, we have 3 partners, one wants to stay, we're going to sell the business, we only want to sell 80% of it. And I went ahead and did that transaction. A year, 2 years down the road, if the partnership, the new partner wasn't getting along with the one who stayed or whatever, they literally could unwind the deal because I didn't have a securities license and participated in it. So it's subject, one of the remedies is rescission, subject to rescission. Now, who do you think is going to end up footing the bill for that? Right?
Yeah.
So you just need to be careful, is all I'm saying. Just understand the laws, understand the remedies, understand the repercussions, because you can do a lot of things, and as long as there's not a problem and not an issue, it never comes back to haunt you. But it's, that little 1% of the time that somebody gets disgruntled and wants to create a problem or wants to undo. And if the law allows them to undo, then,
right,
you can lose a lot. So be careful on that one.
good advice.
Also, and
on
we
the
do have,
subject, oh, sorry. I
go
was
ahead,
gonna say,
Miles.
on this subject, I know that you are required to have a securities exchange license in my state. In the event that you do get approached by somebody who is looking to sell stock, what is a good place to go to find licensed professionals that can facilitate that? Are there any like trade organizations or, where would you recommend looking for, people with that license?
Well, I mean, you don't need somebody with a securities license. So basically, the representation agreement that you have in EXP basically says that you're going to find a buyer for the business, and that if the business is sold or in any way, whether the person is hired, whether they sell stock, whether they sell all the assets or substantially all the assets of the business, any of those things are considered a sale, right? The way that the definitions are. So usually if somebody says, I want to sell stock, it's like, yeah, okay. We just have them sign the standard representation agreement. Ultimately, I mean, I usually tell them in California in particular, most of the time when you're dealing with small business, the buyer's attorney is going to tell them not to buy stock, because when they buy stock, they are buying all the known and unknown liabilities of the company. Okay, so there are reasons why you would go ahead and why a buyer would buy stock despite that, and usually that's particularly in when there are licenses that are at the corporate level. When they're like, for example, a durable medical equipment, it takes 2 years to get a Medicare billing number. And so when they sell that, they usually sell those stores under stock purchase agreements, because that Medicare billing number will not transfer otherwise. And so nobody's going to buy the business if they then have to apply for a Medicare billing number and wait for 2 years to get it. Meanwhile, they can't conduct business, right? What have they purchased? So for that reason, also if there's Department of Defense, in manufacturing, if there's Department of Defense contracts, they have a cage code, they have other things where the government is, paying them on those contracts. The contracts sometimes have to go, they're not transferable. If they're at the corporate level, somebody else can buy the stock of the corporation and everything continues, because the tax ID number, the cage code, all of that stays the same. However, if somebody comes in and tries to buy the assets of the company, you have to either negotiate with the government or those contracts go back out to bid. And so then again, it's like, well, what has the buyer just purchased? Because you've got this huge disruption in cash flow, or in the revenue flow of the company. So there are reasons why you definitely would want a stock sale, but most attorneys, by and large, when it comes to small business in particular, because small business owners are so creative with their tax mitigation strategies, that it presents potential liability for, and a lot of unknown liability for a buyer in the future.
If I could just add something, I think you hit it like, on the head. My deal that got unraveled with the stock transaction, the buyer did some research and doing their due diligence, they discovered that the buyer had several lawsuits that were open and pending.
The buyer or the seller had lawsuits?
I'm sorry, the seller. And there were a couple of sellers. I was dealing with the other seller, and I had several conversations with them trying to find out, what's going on in the background, if there's anything that's open and pending. It was a self-storage facility, and they did disclose there was some break-ins and stuff like that, but this was like something totally separate to the current business. It was some construction deal that it was taking place with one of the partners. And so when the buyer saw that, and we did not disclose that, he got really scared and sort of like backed out of the deal at that point. But yeah, you're taking on liabilities that are unseen, and I didn't discover them. So that was really my mistake as well. I should have done more digging to find out, and kind of like be ahead of this issue. So yeah, so that's my only one experience with a stock sale.
Would something like that need to be disclosed on our seller's disclosure, right? Is there a section to ask about pending
Yes.
litigation, I believe, right?
Yes.
Yes.
Yep.
And it should be disclosed, and sometimes they just say no anyways. I mean, I've seen buyers' disclosures where they've had you on the purchase agreement, they say they're getting an SBA loan, and yet on the buyer's disclosure, there's a question asking if they need any third-party financing, or if they have sufficient, if they have all the cash they need to close, and they'll say yes. So, one contradicts the other. But sometimes they just don't pay attention. And yeah, so people don't know, sellers don't always disclose. So when there is an issue, let's say somebody has bought the stock, so they now own the company, and the company is being sued or whatever, or let's say they get an audit notice from the IRS 3 months after they take over the company, and the IRS wants to audit them for 3 years prior. It's like, well, guess what? You're being audited. You don't, I mean, you bought the stock. You don't get to go to the IRS and say, hey, not me. I just bought the company. It's like the company is the one being audited. And if you are the corporate officers now, then deal with it. So it's those, again, because so many small business owners play games with their books and records. That is actually, an IRS audit is one of the biggest unknown liabilities that you're going to run into. And particularly, so, I just always tell, if somebody tells me that they want a stock sale, it's like, good, I hope your books and records are squeaky clean. Because if they're not, then don't count on it. You need to have really good books and records, and they need to be super clean. Very few add backs, your standard interest, taxes, depreciation, amortization, that's about it. Officers' compensation, but all the travel, entertainment expense, auto expense, all the nonsense that people put through, the beach house, the boat slip, all that kind of stuff can't be in there.
I just want to add that on the right side of things, that deal did get unraveled, but we ended up finding another buyer, and we actually ended up doing an asset sale, so it went through smoothly. So don't give up. You got to get your feet wet. If you, my take on this is, I'm gonna do a stock sale sooner or later. Just don't be scared and get it done. And hire an attorney for sure.
Yeah. Dick, you're muted.
Yeah, uh, well, the seller, it's incumbent upon the buyer, I mean, to do their due diligence. Either in an asset or a stock sale. So really, from that standpoint, if there's a buried gas tank on that property, there's some things that the seller is responsible for too, of course, but I mean, the liability is always kind of hanging out there. And I don't know what it is in everyone's state, but I know in Idaho where I sold a service station or bought a service station, we had big tanks. We had 3 or 4 10,000-gallon steel tanks, which are really the worst. And it was on a piece of ground where everything electrolysis ate through it, and so we had leaks. And so we had a big problem, and we had water or pollution in the water down in the aquifer, and fortunately, Chevron was involved in this case. I didn't actually have to pay anything for the cleanup, but there was a major cleanup. But I mean, I didn't know. I mean, I'm just buying this thing because I wanted to buy it, right? I didn't realize the liability. I was just in my 20s. I hadn't gotten my feet wet in legal problems yet. But I mean, that's part of our job as brokers, to know some of that stuff and to understand what could happen or might happen. And I think what Tanya is saying here is cover your bases as best you can and think about it. A lot of it's common sense, but boy, I was lucky. Let's just put it that way. I think God was looking out for me there. I would have been bankrupt before I got started, and been out of business. But I think that can happen. And people that you buy from might know things, and they may not tell me if I'm the broker. So I don't know. What do you think, Tanya? What's your thinking on some of this?
Yeah, I mean, I think that, look, we are in the business of helping people buy and sell businesses. And so we are supposed to guide, especially first-time buyers, we're supposed to guide them or give them guidance. A lot of them don't know what to do in terms of due diligence. Yes, they should hire CPAs and they should hire attorneys to help them through the due diligence. Oftentimes they don't. And so, there are some basic things that ultimately, even though, there are 2 schools of thought, there are some people that say, oh, brokers shouldn't get involved at all in due diligence. You just wipe your hands of it, say, hey, not my problem. But you got to look at how a court, how would a jury look at that? If you're sitting in the jury and somebody's a professional business broker and that's what they do is buy and sell businesses all the time, and they didn't make any effort whatsoever to help that poor buyer determine, even just a basic initial due diligence checklist or something, they didn't give them any guidance, then I mean, I think as a jury, as a jurist, I'm looking at that saying they didn't do their job. That's, it's neglect. It's breach of duty, breach of whether, maybe they only had a duty of honesty and fair dealing with the buyer, but still, is that really fair dealing? I'd kind of argue not. So, I mean, I do have like an initial due diligence checklist that I send out to buyer and seller. I send it out to my sellers and just say, hey, this is kind of, these are the very basics that a buyer is going to probably want from you. So start putting it in order today, And then when we do get a buyer, I'll send them the initial due diligence checklist and say, hey, send this to your CPA and your attorney and have them add on to it. This is just a basic initial list. Have them add on to this, So but at least it gets them started. It's a place to begin. And then I feel like I've done my job in giving them some guidance at the end of
Tanya,
the day.
would it be possible to get a copy of that due diligence list?
Yeah, sure.
Okay, thank you.
Yeah, not a problem. It's pretty basic.